What's up, guys? Welcome back to another video. We're gonna be talking about an advanced price action lesson, ranges amplified. So we're going to cover a slightly in-depth look into the market mechanics behind how far into dealing ranges and PDRA's price trades to, why they trade there, and how we can predict it beforehand. And I'm going to show proof. So the only thing the market cares about is liquidity in terms of old highs and lows. It doesn't care about PDRAs or anything else besides time. And you guys are going to see that when I show you the examples here. The market will seek a lower time frame range, so buy stops and sell stops, inside of a higher time frame price leg, dealing range, or PDRA. So how deep into a price leg or key level the range is determines how deep into a premium or discount price will go. So an example of this is when price trades deep into a dealing range, OT levels, sometimes it will react from 50%, sometimes deeper in OT levels. Why does it do that? And that's what we're going to cover here. So I will only use examples in this video of trades I called live in my private Discord group with proof that I did call them in advance. The reason I'm doing this is to show you a proof of concept. So you all know that this is predictable beforehand and that you guys can do this as well. So here's a depiction of a dealing range here. So this is based off a higher time frame. So we have a swing low and swing high taken here. So we have a dealing range. Then we have the 50%. And this is what price looks like on a higher time frame. Why does it react from here? Why doesn't it react exactly from 50? Why doesn't it go deeper here? Because on a lower time frame, there is a pool of liquidity in terms of a range low, and the market will seek the range within the dealing range on a higher time frame, run the stops there, and then run for the range high in terms of the buy stops. So here is a screenshot from a video. It's a market outlook where I called the longs here on Bitcoin. We all know Bitcoin's at all-time highs near 100K. And I want to talk about this dealing range here where price trades back down here. Why doesn't it react from this fair value gap here? Why does it go deeper here into this FVG? So here is the dealing range. So swing low gets run, swing high, and then we have this low to this high and 50%. Now, the market goes deeper here. It doesn't hit 50% here and start to run for the high. Why? Why does the market go lower? It's looking for a lower time frame range. So this is the lower time frame. And you clearly can see a range low here with sell stops and a range high. So the market trades all the way down deeper into the dealing range because it's seeking the sell stops within it. And this is where the reversal point happens. And this was the long I called in the group. Another example, and we're going to go over many examples here, guys, because this is a very important topic. So I want you guys to really wrap your heads around this. Here's another play I was watching on Euro AUD. Here's your FVG, sell side here in terms of relative equal lows, easy drawn liquidity. So higher time frame key level here. Market trades back up. Why does it trade all the way up into here? Why doesn't it just take the low of the FVG here, trade lower? Because it's seeking this buy stops here, the range high here to the range low. So that's why it doesn't just tap the FVG here. You can see that red box is the higher time frame FVG. Why doesn't it just tap it here, then trade away from it? Because it's seeking the buy stop. So it goes deeper into the PDRA before selling off. Another example here on DXY. This was a while ago. And we'll show you an example here of this small volume imbalance here where we call the longs from. So you can see the volume imbalance here on the higher time frame. So this is our higher time frame key level. And this is the lower time frame. So this is actually a picture from the Discord group. And I wanted to see SMT with these lows here, form on GU. So this is the aftermath, price retracing down here. Why does it retrace here? You guys know that already, but we'll go over the example. And then it sends it off. So as you can see here, dealing range low, high time frame key level. Market doesn't just tap the high time frame key level here and trade away. It comes down further one more time, overshooting the high time frame key level as well, going deeper into discount because it's seeking the range here. So it seeks the lower time frame range within the higher time frame dealing range before it runs for the buy stops here. Another example here, continuing with the bullish bias on DXY from the last example. This was the last example here. And then this was another trade we called from this FVG here to the highs here. Once again, we have the low to the high here, our dealing range. Market trades all the way down here. What is it seeking? Deep, deep in discount here, the range. So it looks for the liquidity within the dealing range. And that's how deep price goes. Here's another example. So this is the same play on the higher time frame. And now we're looking at this on an hourly. So this is an hourly FVG here, which I said we'd use to long. And now we're going to drop into a lower time frame in this 1 hour price swing here. So this retracement on an hourly. So this isn't just used on the higher time frame. You can use this on a lower time frame, like an H1 here. So if we drop to a 15-minute here, this is that H1 for a value gap. You can see price trades down into the range low here. In this case, the H1 FVG's high, is the range low. So you see it just tap. It doesn't even get to 50% because it doesn't need to, because the range is here and not lower. And then it trades away. Now we're actually going to look at this price swing as well. So you can see how fractal this is. So this is a 15-minute price leg. Discount low, premium high. Market trades down into what? Range low to range high. Deep into discount, into the order block here. Seeking the sell stops. Not caring about this or anything else in a premium here. It's seeking the sell stops. And now we're going to talk about a bullish order block here and how the market is seeking a range as well. Here's an example. Here is a call out from the group. Notice the bullish order block here, the daily chart. We displaced through it, but the market doesn't care about the daily order block. It's seeking the sell stops within the high time frame PD array. And this is the aftermath of that. So notice here, this is where the daily bullish order block is here. So I'll zoom in. I was trading this live as price was moving in a live stream with the group. And when this candle closed here and left an FVG, a lot of my students were asking me, is this still a valid daily order block now that we've done this? I told them yes, because the market doesn't really care about the order block here. It's seeking the range within it. And that's exactly what it does here. It goes below the range, accumulates those stops, and then takes it to the range high. Another example here of a trade idea I called live in a live stream. You have a premium high, discount low. Market retraces all the way up here. Notice the bearish order block, as most would think here, in a premium. Why doesn't it hold here? Why does the market go deeper and look for this fair value gap here, our higher time frame key level? The range. So that bearish order block, as most thought it was, is these two up close candles here. It's in a premium, so a lot of people were looking for shorts from this level. But the market doesn't care about the PD array. It cares about the range within it. And that's what you see here. Then you get institutional sponsorship. With the FVG, there's SMT here. And this is where we call the shorts in a live stream here in New York session. All right, that marks the end of the video, guys. If you guys want to join the Discord group to catch these trades that I call out and to watch me trade live with entry, stop loss, and TP, more educationals, exclusive ones, you can click the link in the description. And there's a few seats remaining and we close it in mid-December. All right, take care.